first company presenting today is Petropavlov, one of Russia's major gold mining companies in terms of both production and reserves and resources. The company is amongst the most established and most experienced vertically integrated gold producers in the far east of Russia. Presenting for the company today is Denis Alexandrov, Chief Executive Officer. He was appointed CEO in late 2020. Prior to his appointment, he was CEO of Highland Gold. Before that, held a series of senior positions, including CEO of Orient Mining, an A1 investment company, and the CEO of Ariane Investment Company. So I'd like to present Petropavlov and the CEO, Denis Alexandrov.
Thank you, Adam. Good afternoon, ladies and gentlemen. Let me present you our company, Petropavlovsk. Cautionary forward-looking statement. I'm sure you've seen a lot of those before. I'm not going to go through that in detail. A brief overview. We are a FTSE 350 publicly listed gold miner operating in the far east of Russia, specifically in one area, Amur region, just north of China. We have 3 producing mines and 1 POX plant at the same area, which is just one of the 2 POX plants in Russia. 8.5 million ounces had been produced so far during the history of Petropavlovsk. The average life of mine is around 16 years, and the gold production guidance for this year is 430 to 470,000 ounces. We are a vertically integrated gold mining producer. We do have some research institute, one in Irkutsk, a very established Russian Hydromet Institute, which is doing basic designs and flow sheets for the industry. And then in St. Petersburg, we have the Hydrometallurgical Center, which is focused around issues with metallurgy on the refractory ore. Premium listed very quickly here. Market cap is about $1 billion. Good liquidity. We're listed not only in London, but also on the Moscow Stock Exchange since June 2020. We do have one of major shareholder company called UGC, which is a private Russian gold producer, established gold producer. And the other shares are basically with the market. Since I joined the company in December 2020, not that far ago, with the new management team, we put the following 4 priorities in our focus. The first one was to increase gold production from our own sources. And that is basically coming from increasing flotation facilities and processing factories for our existing reserves. Maximize POX utilization, and I will have a couple of slides on that later in the presentation, but also accelerate the development opportunities that we have in our portfolio and bring them to production. The second avenue was to cut cost and focus on operational efficiency with the view not only to cut costs as a one-time exercise, but basically to instill a culture of continuous improvement throughout the company so that people believe tomorrow we can do better than we're doing today. The third one was manage the balance sheet and decrease the cost of debt, work on the refinancing of our high-yield 500 million bond, which is maturing in November next year, and also eliminate the guarantee we have for one of our portfolio companies, IRC, where we hold the 30% stake, but historically we guarantee 100% of their debt. The fourth one was improve corporate governance and oversight, and that's enhancing transparency, introducing new policies, improving our budgeting tools, our ability to guide the market and engage with the market. All of that we believe should consolidate the shareholders around our long-term goals. We plan to present at the end of October to the market the new strategy document where we will lay out the development possibilities, the production profile, capex required, how we're going to finance that, And last but not least, we're going to introduce the dividend policy. The company didn't pay dividends up to today, never had a dividend policy. We believe in dividends. We think that profits should be shared with the shareholders. It should be a balanced return. And so the dividend policy will be discussed as part of the discussion of the strategy. Looking at our asset base, we have around 19 million ounces of resource, and most of that is refractory ore. So if you think about the company today, it's basically transitioning from historically mining and producing gold from non-refractory oxide material to now mining and processing the refractory ore material. And that's why the company has built POX plant, and now we're building more flotation facilities at our currently operating mines in order to produce our own refractory concentrate. Gold production, again, this slide demonstrates that the production quarter on quarter was going down starting from the fourth quarter 2019. The reason for that was depleting reserve of non-refractory ore, and so the gray part of the bar shows you the non-refractory gold production of gold from non-refractory sources, and that one was decreasing. We have commissioned a new flotation plant at the end of May 2021, and so we believe that the trend will be reversed now. The Q2 production was already higher than the Q1 of 2021, and we expect Q3 and Q4 being higher than the previous quarter. This is our POX plant utilization schedule that supports the coming increase in production of our own gold. You can see that over the last year or so, the utilization ratio was around 50%, and out of that, 40% was coming from the market, i.e. we would buy third-party concentrates and process them at our facilities. In Q2, we reached around 70% utilization, with just 30% coming from the third parties. And Q4, we expect to be fully utilized, with around 13% only coming from the third parties and 87% coming from our own concentrate. Over the next few years, we expect that amount of third-party concentrate required to utilize POX at full capacity will be between 15 and 20%. To demonstrate why it's important, here is a slide on our margins. You can see that on average, the margin from our own concentrate is around 50%, and the margin from the concentrate of third parties is just below 10, around 9%. So it's important for us to decrease the reliance on the third-party concentrate. This is a slide about commissioning of the new flotation plant at Pioneer Mine. Pioneer Mine in 2020, 100% of its production was coming from non-refractory sources, but majority of the reserve is refractory in nature, so it was vital for us to build the new flotation facility, which we've done. We commissioned it on budget, a little bit ahead of the schedule. It's 3.6 million ton per annum mill, which will produce around 60,000 tons of concentrate this year and 100,000 tons of concentrate starting from next year. We're also now constructing a second line at our Malomir mine. Malomir currently has 3.6 million ton per annum flotation plant, and we're adding another 1.8 million tons per annum there that will be commissioned in the third quarter next year and increase production of our own concentrate from that mine by 50%. The third mine we have is Albin, and Albin used to process ore from the Albin deposit itself. That was fully depleted by the year end of 2020. Now we started processing ore from nearby Elginskaya deposit, which you can see kind of at the southwest. It's 36 kilometers down the road. The ore there is mixed. It has refractory and non-refractory components. The grade is lower than the grade at Albin deposit. The recoveries are significantly lower, around 75 to 78%. And we have to mine both refractory and non-refractory ore. So in order to feed the mill with 3.6 million tons per annum of non-refractory material, we're actually mining about 9 million tons of ore and stockpiling the refractory bit. So things that we're considering to do there is adding on to the existing Albin mill, the gravity and flotation circuit, to be able to treat refractory ore. We also want to understand the deposit much better, so we initiated a drilling program of 30 to 50,000 meters this year, which will be completed by year-end. In parallel, we're doing the technological mapping of the deposit. We took samples to identify what the best technology, metallurgy will be for the mixed ore, refractory and non-refractory. We selected the technology that will be gravity plus flotation, and we now progressed into the development of the flow sheet and basic design for the new flotation and gravity and flotation mill. A few words on our TCC from presentation of the first half. Our TCC increased from around $800 an ounce to $906. There are two major reasons for that. One is $45 an ounce increase related to mining tax, because last year Albin deposit was mining Albin deposit, and we had a tax breaks for that, so we didn't pay the royalty on those ore. Now that deposit is depleted, as I mentioned, we moved to mine another deposit. There are no tax breaks on that, so we started to pay a full 6% royalty, and that's the increase. And the second increase, around $41 an ounce, relates to lower grade, lower recoveries, mainly at Albin as well. Business review. When we joined the company, we initiated a thorough business review. We looked at organizational structure. We restructured Moscow office, cutting down employees there. We're now restructuring Blagoveshchensk office, an office in London. We look at purchasing and logistics. Eliminated certain middlemen and certain resellers, renegotiated prices for our contractors, including mining contractors, reviewed the capex spend. On the contracting side, we've reviewed over 100 counterparties. If they have any signs of related party transactions with our employees, we blacklisted around 30 contractors or over 30 contractors, and even certain mid-level employees had been fired for violation of ethics rules in contracting. So all of that achieved gross savings as a result of this exercise were about $26 million. Some of them relate to capex and one-off. Some of them are actually ongoing, and we will continue to have those savings in the years to come. We expect that those savings will start floating into our P&L starting from the second half. We also improved the debt maturities. So in July this year, we've done a tender offer for up to 200 million of our bonds. We were able to buy from the market 136 million worth of our bonds. So now our debt maturity looks much better. We have only 364 million outstanding in terms of debt by November 2022, which I think is a comfortable level to be able to refinance. We also opened certain credit lines with the banks, and now we have a headroom. The green bar at the bottom, you can see that's the headroom we have currently. So open signed credit facilities that we can draw down pretty much any moment. A couple of questions on ESG. Well, the board of directors, we said that we want to improve on the board of directors. We added one independent non-executive director, Mikhail Rzhevsky, this year, and also Evgeny Potapov, who represents the UGC, the major shareholder, replaced Maxim Harin, who used to hold this position up until July this year. So now there are 4 independent non-executive directors in the board, including the independent non-executive chairman, Jim Cameron, and the board is looking for one more board member to join. On the operational sustainability, well, 0 work-related fatal injuries in 2021 and in 2020. LTIFR went up a little bit from 1.23 to 1.75 due to more rigorous reporting this year. 0 major environmental incidents, no material outbreaks in terms of the COVID. By now, at the mines, 70 to 80% of our workforce are vaccinated, and for the company overall, it's about 50%. We had 2 important additions to the team, which I want to mention. One is Roman Dertinov joined us as a head of health and safety, who who used to have similar position in the Polus, major Russian gold producer, and very well known in the market. And the second one is Armen Stepanyan, who joined us from Lydian, who is again a very well-known professional guy with in the environmental sphere. ESG ratings, we are part of a number of ratings. The most recent was we've been included into the FTSE4Good index. I'm not going to go into details on that. Obviously, ESG is important, and environmental in particular. So we do take care about our ratings and about what we do on the ground. And then an outlook, which we published earlier the year. Own production guidance 370 to 390,000 ounces compared to 386 last year. So pretty much in line, replacing the non-refractory gold production with more of a refractory gold production. And TCC on our own gold, $870 to $970 an ounce, mostly increases driven by Albin, where we switched to mining lower grade and lower recovery ore. And then on third-party concentrate, we expect to produce from 60 to 80,000 thousand ounces of gold, with overall production 430 to 470. Third-party concentrate was not available for us, unfortunately, at the beginning of this year. We had contracted only about 40,000 tons. Now, by the end of the year, we catched up. So the third quarter and fourth quarter, we are okay. But in the first half, we were lacking the third-party concentrate and therefore couldn't upload our POX plant to the full capacity. In terms of processing cost for the POX plant, our guidance was $180 a ton for this year. We revised it downwards. We already achieved about $170 a ton. And by the end of the year, we expect to achieve around $150 a ton. So the average for the year will be around $150 and $170. A few words on capital expenditures. This year, CapEx is $140 million, including $20 million for exploration. Half of that will go to the Albin Elginskaya deposit infill drilling, which I mentioned earlier, and then construction of 2 flotation plants. One is a Pioneer. Total cost was $64 million, and this year we had spent the remaining $26 million, and we commissioned that mine already. And then Malamer flotation expansion, again, $65 million total capex. This year, $43 million, and then for the next year, the remaining will be around $11 million. And the rest capex was basically maintenance and some of the development to spend on feasibility studies and major design documentation preparation. And to finish the presentation, basically what we expect in terms of the news flow is end of October, the Capital Market Day, where we present the strategy for the company, how we're going to develop, in particular, the Albin cluster, what will be happening to the Pioneer and Malamer mines, what is the capital required, what is our forecast or plans in terms of improving or increasing the POX plant capacities. All of that will be tied in with the capital required, financial strategy on top, guidance on the cost, and again, the dividend questions. I think that's it, and I'm happy to take questions.
Oh, thank you very much. So if there are any questions in the audience, if you could please walk over to one of the microphones in the center aisle. I see we have a question.
Thanks for the presentation. As you get into those lower grade ore bodies that you referred to, what's going beyond this year into next year and the year beyond? Will the cost continue to increase because of lower grade?
Yeah, thank you for the question. I think that if we look at cost per mine in terms of mining cost and in terms of milling cost, they actually go down. But the grade, as you rightly said, the grade and recovery affects the cost. So at Albin, we expect the cost either stays similar to this year or increase, again, because of the recoveries and the grade.
Right.
But at Pioneer and Malamer, we expect those to start going down.
Okay, thank you. Could you just, you said the reason why you couldn't buy concentrate earlier this year was, I missed the reason, was it because of lack of funds?
Yeah, no, it wasn't because of lack of funds. The company last year had some turbulence on the level of shareholders and the board. And I think we just missed the September-October contracting window in Russia. So some of the concentrate that we used to buy was also not available this year. So at the beginning of the year, we had only 40,000 contracted, but now I think we're up to about 80,000 for the year, so we were fine.
Okay, thank you.
Any further questions from the audience?
Yeah, and probably to follow up on that, we now buy concentrate not only from Russia, but we started to process concentrate from Greece, for example, and we're looking at other kind of countries to bring the concentrate in, because the POX is located right on the Trans-Siberian Railroad and has a good logistics both from the Japanese Sea and from the Black Sea, from the port of Rostov or from the port of Vladivostok. Thank you very much. Thank you, Adam.